Let's Get Down to Business is presented by Bravo, the marketing arm of Ash Brokerage Corporation, the practice enhancement company. All this week, it's multi-life and executive long-term care insurance. And on today's show, portability of long-term care. And with me, nationally recognized long-term care expert, Maria Sarchi. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician. Let's get down to business. Well, welcome to the Friday show, Maria.
Can't believe it's Friday already.
I know, 5 days in a row. You're stretching me. I'm having an elasticity problem because I'm being stretched so much. Really, I have to say, most of my advisors are going to be responding saying, hey, you know, Steve, this is new to us.
I'm glad we're creating awareness.
This is huge awareness, and of course, November is long-term care awareness. So you're seeing it all here in November, and we're just doing this show. Remember, a week or so from now, we're going to be doing Thanksgiving, carving the turkey, and oh my goodness, we'll just be celebrating. Now, today I want to talk about this because this is the beauty of multi-life. This issue of portability. Until we started talking about this, I thought, well, we still have the same group. I leave my company, it stays there. It's a benefit provided by the employer, but if I walk, I'm walking away from it.
Yeah, not the case with multi-life long-term care.
Yeah, I mean, there's an advantage to this.
There certainly is. And the advantage is that when you retire or leave the company, you can take that policy with you. And what happens is that the premium payments go from payroll deduction to auto bill to your home or to wherever, but you can take that contract right along with you. It's the beauty of having it on an individual LTC chassis.
Now, I'm just assuming that I leave the corporation. Let's say I'm 62. Let's say I am, because I am. Let's say I'm 62 and I leave the corporation.
Yes.
And I leave and I take my policy with me. Boy, I sure would like to pay that monthly. Is that okay?
It is.
So I can pay my monthly premium.
You can. And the expectation is that just because you leave the company, your premium will stay the same. Now, keep in mind that overall, there is always the opportunity for premium to increase, but they can't increase it just because you're leaving the company.
Well, then let's talk about that, because we did not, to my knowledge, I recollect we were a couple weeks back when we were talking about individual long-term care. Are there any policies left any longer that lock down the premium and there is no possible contractual increase?
The only way that it is done is for a short term. There are carriers out there that will lock that premium for a 3-year period, 5, maybe they'll go as high as 7 or 10, but that's it. And it's important to note that in the long-term care space, just as we experience with some of our other benefits, there is an opportunity for premium to increase, which is why during the planning phase, you should anticipate the ability to pay those premiums if they were to increase in future. It's something that an advisor will talk about with their client.
If I think through that, I'm taking it with me, and this goes for multi-life or individual, the application of that. What can I kind of get a baseline thinking, if I'm paying over a 20-year period, is there a likelihood, or is that just so far out in the future we can't anticipate? Is it 2%? Is it 5%? What's the increase in the actual premium? It
really varies. From what I've seen in the marketplace thus far, those increases have really run the spectrum. It can be as low as 10%, could be as high as 80%. It really varies. But I will say this, oftentimes when a consumer comes to me and says, I've just received this premium notice, and we do an audit. In today's dollars and benefits, you simply cannot match even that increased premium. Because when they bought their policy 10, 15, 20 years ago, they were buying a really high benefit for a premium that was pretty low. So even with the increase today, you still can't go out and buy those same benefits. Now, it doesn't mean that that premium increase doesn't sting. Of course it does, which is why creating awareness around the fact that this is a premium that could increase as we experience with other benefits that we own. Set the right expectation. Don't let the client be caught by surprise.
Well, I know I go back to a couple days ago when we were talking, I think it was on the Wednesday show, where we just brought up the idea of there are some ways to mitigate this. Maybe you'll buy the return of premium plan. Would that not cover any increases at all as well?
Not necessarily, because return of premium comes into effect when the client passes away.
So if he passes away, though, if I had paid increased premium, though, would I get that to my beneficiary?
Of course.
Well, you may want to look at that. That could be a play. Okay, so I have portability. I have benefits. The benefits are going to stay the same. The premium may not, though.
Correct.
Okay, all right, just to make sure I got that right. Now, communications, now all of a sudden all the traffic that used to go to HR is coming to my home.
Yes.
I'm paying, it's all coming out, well, in my view, I'd be saying, hey, do it out monthly. It's all coming out monthly draft so I can manage the budget issues.
You can.
Okay. When that happens, and I have that going on now, I've taken over the policy. Would there be any reason, and I'm just trying to stay at my 62 age, I came from a group policy. Maria, are the moves in long-term care so much so that I might want to look at replacing it with an individual and get you underwritten again?
Well, you
Let's
already,
say I was
have,
okay,
it, you already have an individual contract. So what would be the benefit to replacing what you had from your employer?
So there's no difference. That's what I guess what I'm trying to say. So really, once I have it, I have an individual contract.
You do.
Now, when I'm thinking about taking this on, portability, I love all that. I take that on to my own personal budget. I'm paying this out. I have the option. Can I go in after the whole thing is done? It's been issued. I've been paying it. My employer paid it for a couple years now. I haven't. Can I add stuff to that on any anniversary, or is long-term care not like that?
Yeah, once you have your policy design, if you try to add to it later on, you'd be factored at your newer age, so your older age. You'd also have to go through underwriting. So oftentimes what we suggest is that we look at that intact policy as is, and if you wanted to supplement or add benefit, do so, but keep that contract as is.
Okay, so if I want to supplement, let's just say that we come out of employee. I was so happy to have the long-term care. My employer paid for it all. That's why I had it. Oh, I have to pay for it now, right? Okay, well, my life has changed. Maybe I'm like, oh, I don't know if I want to be able to add supplement, but what if I did? I want to add a little bit more to it. Am I adding another individual long-term care policy, or are there supplemental plans that are not a full-blown individual contract?
You'd probably go ahead with a second individual plan. I don't know of any supplemental type policies where it would just be minimum type benefit, where maybe you're just buying an inflation rider. You'd go out and get a second policy.
Okay, so I'm always trying to think about, supplemental insurance. Should I buy a catastrophic plan, a cancer plan, a terminal plan, any kind of critical illness plan to supplement, to pay out bills? I'm trying to say, well, what if I wanted to add on to my LTC? Okay, I understand. When we come back from the break, we're going to discuss some of the talking points that you can use with business and clients about long-term care and its impact on employee recruiting and retention. And don't forget, you're going to request the long-term care manual right from Backroom Technician on our website, downtobusiness.ashbrokerage.com, or just sign up for your own 30-day free trial offer for the full Monty. Backroom Technician at brtnow.com/trialsignup.aspx. We'll be right back with Maria right after the break. Back in the day, life insurance professionals were called field underwriters. Then, carriers trained their field force in the basics of life insurance underwriting. Today, the insurance industry doesn't educate the agent population as they once did. But now you can have the Informed Risk Guide at your fingertips so you can illustrate a reasonable rate class for your life insurance prospects. Just request your copy of the Informed Risk Guide at downtobusiness.ashbrokerage.com. It's free from Ash Brokerage, the practice enhancement company. Well, welcome back. I'm Steve Savant with Maria Sarchi. And remember, you can watch all our episodes of Let's Get Down to Business, including my weekly consumer show, Steve Savant's Money, the name of the game, right at ashbrokerage.com. Just click on the show logo and it'll take you right out to our shows, as well as the archives of all the things we've done. Just a heads up, though, before moving forward with any of the ideas that you hear on our show, always consult your tax advisor or legal counsel, as well as your broker dealer compliance officer. Well, let's get down to business. We're talking about the talking points. I kind of like talking points because it kind of like, well, we haven't even gotten the front door yet. We better talk about some talking points. We've talked about the virtues, the value. Now let's talk about it. What's my little outline, my crib sheet?
Well, for me, the thing that I've seen work best over and over is having the advisor say to their business owner client, have you thought about offering a benefit package for your clients that could essentially cover the greatest risk in their retirement?
Do they even know that when you say that, the greatest risk? Does the employer know that?
Often they'll ask, well, what do you mean? Because in their mind they're thinking about income or they're thinking about health insurance.
Sure.
And that's a great spot to use some of the stats we've been talking about here on your show, Steve, to say that top of mind, retirees are thinking about the ability to stay in their own home, receive care on their own terms, and knowing that as an employer you could offer this benefit that absolutely puts that objection to rest. It's a great option to have.
Well, okay, so my talking point, I'm introducing to an employer. I'm out to lunch. How did I get through the gatekeeper of the company? I did, though. I'm in front of the person who matters, the person who's going to write the check. And I'm bringing a talking point about the #1 risk to retirement, right, which is human longevity. And the impact of that is going to impact our 401ks, but it's also going to impact our ability to need assisted living. Now, right now, I think that one of the stats you did bring up early on, a couple weeks back when you were on for the individual, was that you said something like, I want to say 70% of people will experience some kind of long-term care event. Okay, fair enough. But if we're living longer, I can't understand how that timeline or that number would not start to creep up.
I agree.
Because the longer I live, the more chance or opportunity or Vegas odds that I'm going to need it. And when I think about that, most of the people, we talked about this a couple weeks back, I have my fantasy of going assisted living. You know, who wants to go any place outside your home? And there may be that opportunity, I might have to do that. But assisted living, when I'm looking at this, does that matter to an employer who says, I really love a couple of my employees. I'm they've done a great job for me. I want to make sure they're taken care of. Do you ever see that kind of heart? It's not just a deduction issue. It's not just an employee HR issue.
Absolutely.
The employer says, I love this.
Employers care about their employees, and they become a family in some sense of the word. And so offering a benefit which brings so much nurturing at a time where their employees need it most, and not only takes care of their employee, but their family. The person why they walk in the door every day and go to work to take care of.
Well, you just used one word that I thought would be a monster way of getting in, which is I love closely held family businesses. I do. I love them because everybody's related. You have to kind of get through the drama of the family, but once you get past that, and I can see people saying, hey, we're buying dad and mom out. We're gonna make sure they're retirement. Oh, and let's make sure they have long-term care because I don't want to have to come back in and have to foot this bill. Let's go ahead and make part of their departure long-term care as a perk on the way out.
Yeah, of course. And for the business owner, when they're sitting down with the advisor, the agent, the insurance professional, you know, to be able to say, look, I have identified this as a need I want to cover for my employees. To have that insurance professional go out to the marketplace and find a solution that could be custom designed for that business. I mean, the employer is bringing something that is so in tune to their employees, that's not a cookie cutter, that is really designed with their best interests in mind. You can have all kinds of flexibility in the plan design and even flexibility in the underwriting component. It certainly is a win-win.
When I think about the coverages that most really good employers, they're very good about medical, they short-term DI, now we're bringing LTC into the thing. I had a client who had a hospitalization issue and he could not return to work. So he got his disability, but he will not be able to return home to do what he wants. He needs today long-term care at 65. And he's going to need it for a long time. They never saw this coming. I didn't see it coming. This is a very athletic tennis player, tremendous. The hospital bills are taken care of. That's not a problem. He's getting DI until he turns 66 or 65, whatever his last day of work is. But honestly, he's now going to have 24/7 care. Nobody ever sees that coming. They say, whatever it is, I have an accident or whatever, I'm going to recover from the hospital. Long-term care, nobody thinks about that as a post-hospitalization issue. Talk a little bit about that.
You know, the reality is that we don't have a crystal ball to tell us what our future might be. It's about finding and covering a risk that we are concerned about. We know the stats are high. 70% of folks will have a long-term care event. When you look at a younger person who is in that space right now, it can be really heartbreaking to know that they don't have the right coverage in place. And it's not because they didn't want to, potentially they didn't know enough about it, which is why doing what we're doing here, creating awareness is so key for employers to be able to offer this benefit to employees and create an awareness to something that potentially could impact their savings, their lifestyle, their quality of life. And it's just so impactful that we talk about what coverage solutions are available.
Well, you talk about talking about young people. I mean, as many of you know, I answer consumer questions on insurancelibrary.com, and one of those questions I get all the time is, when should I start thinking about long-term care? And you know, usually the punt position is, well, at 50 you get your ARP card, and you know, you'll probably buy at 60. But I've also been answering it lately by saying, two things I want you to consider if you're a young person in your 30s and 40s. If you have family history, predisposition to a disease, they have huge family history in why people spend time in nursing home confinement. You may want to get it now while you're so young and cut this off at the pass just to be preventative and really be proactive in your thinking. Well, that's our show for today. Remember, you can watch all my online insurance news commentary, advisor blogs, and articles on producersweb.com, and all my answers to the questions consumers ask me at the Insurance Library. And don't forget, you can view any of our past episodes on our on-demand section right out at downtobusiness.ashbrokerage.com. So, if you want to follow me further, head out to Twitter, Facebook, LinkedIn, or just email me, steve.savant@ashbrokerage.com. And remember, you could be wiser as an Ash Brokerage advisor. I'm Steve Savant. See you next week.